Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Thanks for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the Silicon Valley corporate headquarters of Wilson Investment Properties, the sponsor of Real Estate Radio Power Investing. Wilson Investment Properties is a national syndicator of multifamily and commercial properties, where you can buy private shares of ownership and an LLC or corporation that owns a kind of property that normally only large private investors or institutional investors can invest in. I'm Tom K. Wilson, your host for this weekly show on multifamily and commercial investing and syndications. If you can't make the live show, you can catch your podcast on wilsoninvest.com. We've been podcasting and broadcasting for 6 years now, and we really enjoy bringing on wonderful guests and topics to help educate you and make your best decisions in real estate investing. You can go to also bacom.club, BACOMM.club, for information on monthly education meetup venue on commercial and multifamily investing with world-class speakers. It meets on the fourth Thursday of each month generally, and go to bacom.club to find out when the next meetings are and who the speakers and topics are. Our program today is about, indeed, the investing in commercial and multifamily property. And we have Helen Chong with us today, who is going to be talking to us about her experience with investing and as a broker and a part of a group that helps investors start off in this arena. She'll be sharing with us her thoughts about that. So go to wilsoninvest.com for a weekly newsletter on economics about real estate. Also, you can sign up there and get access by having a relationship with Wilson Investment Property Syndicator to properties and deals that are only available to those who have a relationship with our company, which is typical of syndicators because of the SEC regulations. And we always appreciate your questions and suggestions, and we're always available to answer questions for you. So today we have Helen Chong with us. She is with CCIM, which is a organization that's the most professional organization in the nation that is a leader and educator about commercial and multifamily properties. She's NorCal CCIM president-elect for this coming year, and I've attended some of the meetings and been honored to speak at some of the meetings that they've had in the Bay Area, San Francisco Bay Area. Helen's a UCLA graduate within economics, and Helen, welcome to the program.
Hello, Tom. Very happy to be here.
Nice to have you back.
Yeah, thank you. I'm so excited about today.
Good. Me too. So, Helen, give us a little bit about your background. How did you get involved in real estate, and how long you've been involved in it, and when did you get involved in commercial and multifamily properties?
Sure. So, as a matter of fact, I, like you mentioned, I graduated from UCLA with an economic major, and I went straight into becoming an analyst at a pension consulting firm, and I worked there for 4.5 years. And in year 2002, if you remember, there was like a dot-com bubble bust.
Yeah, I sure do.
And so I was basically an analyst preparing all these reports for our institutional clients. Obviously, they have thousands of employees. And then I was looking through the reports, and I saw that the portfolio value dropped 50 to 75%. And then in the back of my mind, I was just thinking, what if that person needs to retire that year? What will happen to them? What if that happens to me? What if that happens to my parents? And to me, it's just like so out of your control, right? You're thinking that I'm set, I have these pension here, but at the same time, you pretty much left the money there and under control of someone else's. So I started studying for other type of investment strategies. And when I read and studied about real estate investments, that's when I fell in love. I was just like, this is it. This is how I can take control of my financial future. And so that's how I started in real estate in 2004, 2005.
You know, what's strange is that that was cycle number 4 for me. I moved to what was become Silicon Valley in 1969 and started investing in 1970 in real estate.
Wow.
So I felt, traditionally when the jobs fell and unemployment went up, such as it did in the dot-com bust, is generally when real estate would drop down because you had people with less money to be able to afford it. And yet single-family home prices kept going up. Mm-hmm. And I thought, what is wrong? I can't figure this out. Commercial properties, which are based upon income, right, went down, but single-family homes went up. So, long story short, I eventually learned that we had a credit bubble. Yeah. And I thought, when I got the numbers behind my hunch, I started selling off single-family homes. But so that dot-com bubble bust kind of made you think about what made sense to be involved in.
Absolutely. I mean, once I studied about the real estate and I realized that, gosh, you have so many different ways to invest in real estate. You can take control of it. You can leverage. Stock market definitely cannot leverage, right?
You can, but it's
very risky.
Very risky.
Very risky. Yeah. And then there's tax benefits, and also there are different exit strategies that you can do. I can analyze the heck out of it since I was already an analyst. So to me, it just seems like
and it's a real asset.
Yeah, it's a real asset. You can actually touch it. I don't have to worry about like someone else taking control of my investment. So that was the reason why I switched.
Mm-hmm. Mm-hmm. Okay. And so you are now you founded the Haylen Group.
Yep.
Haylen Group. You're founder of that, and you're a multifamily commercial broker.
Yep.
And when did you get involved in CCIM?
So, as a matter of fact, the Haylen Group was actually started as a residential brokerage firm at the time, and that was I started in the real estate back in 2005. I was doing residential real estate sales, and then I invested in single family myself.
Now, when you use the term residential, you're referring to
just like 1 to 4 units, exactly.
1 to 4s.
Yeah. I haven't learned about the apartment side yet, but in 2007, around there, that's when I learned about apartment investing, and then learned about the analysis, how to analyze or evaluate apartment buildings, and I was so fascinated by it. In a sense, like single 1 to 4 units, you are evaluating it by comparing your other properties in the area, right? But for apartment building, it really depends on the net operating income. So that even take more control, because now I can control the income, I can control the expenses, so that I can increase my value by doing different strategies.
It's a lot of flippers or those that hold rental houses, and we've both owned them, and I'm glad I did. And I still have some of those properties, but I've mostly moved my money into multifamily and commercial. But you can remodel a kitchen in a rental house and get some increased income, but it's not a very good return.
Right.
But you can add value to a multifamily for get a lot of higher rent delta for whatever you do to invest in it to improve it generally than you can a house.
Exactly. I mean, I used to do flips as well, just buy a rundown single family, and then I put in all this money in there, and hoping to sell at a certain price. So the decision factor or the market value of the property is still kind of really depends on the market, depends on like what the neighbors have sold for. But for apartment buildings, literally before I even start the remodeling, I already know what I'm going to get out of it.
Has nothing to do with what somebody's emotional value is of it, right?
Exactly.
Has to do with the income.
Yes.
And by the way, when you're doing flips, did you find that was really easy, or it took a lot of time and work?
Oh, definitely took a lot of time at work.
Sound like your experience was a lot like mine. Yeah, I made some money, but that was a lot of work.
Yeah, it was a lot of work. And on top of that, for me at the time, it's funny, I don't know, I generally look a little bit younger, I guess. So when I met with these contractors, they didn't really take me very seriously. So I was having a hard time talking to them. So I would send my husband in. I was like, you need to get on the phone, just talk to them. I think they just needed to hear a guy's voice so that they would take this project more seriously. So at the time, my struggle was kind of like, gosh, I have to deal with these contractors and they're not listening to me. But as soon as I have my husband come in, they were like, oh, okay, sir. Okay, we'll do it.
Well, I bet they take you seriously now.
Yes.
Let's go take a break here, and we'll be right back on Real Estate Radio Power Investing with Helen Chong and talk more about commercial and multifam investing.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit wilsoninvest.com. That's wilsoninvest.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back to Real Estate Radio Power Investing with Helen Chong today. She's the president-elect for CCIM in the Northern California area. And she's on here today to talk to us about her experience in transitioning from residential or home brokerage and investing to commercial and multifam. So let's talk a little bit about that, the process. You've mentioned how you found that you can control things more, and you find it's more predictable income from being in the commercial multifam space over houses, because it's driven by the income, strictly the value, and not just the what if the whims of the market, because of the emotional interest of someone to want to live someplace. And even though we have a lot of investors owning properties these days in the nation and here in our area in Northern California, it's still the majority of homes are bought by someone that has mortgage backed by the government that wants to help people be in homes, whether that's good or bad, that's a whole nother show, and that are buying it to live in, not because it has a good return. So talk a little bit about the process. How does someone determine, first of all, is this something that you think someone should try to figure out on their own, or do you think they should find somebody to help them out? And what's the and then talk a little bit about the process of how you select a good investment.
Sure. So we have a lot of clients. Obviously, they start off with investing in as little as a condominium to maybe a duplex, which is fine. I think that's a really, really good stepping stone. But in the end, as soon as I start talking about how to evaluate a property, how to evaluate a 5+ units an apartment building, most of our clients are like, whoa, that's like much better strategy compared to just 1 to 4 units. I don't want to say like there's something wrong with 1 to 4 units. It's really for people who want to start investing first, to learn about like being a landlord. And then the 5+ units, sometimes it might get too overwhelming. So everybody is different. Their risk appetite is different. So, but when I show you, like, for example, 5+ units, as we all know, the valuation largely depends on the net operating income and the cap rate, right? So I just use this one example. For example, if you buy a 12-unit building, and then you somehow can either increase your rental income or decrease your expenses, then your net operating income will increase. So let's say you just increase $100 per unit. So times 12 units and times 12 months, that equals to $14,400 extra per year. And then imagine if your market where you're at is 6% cap, and then 6% cap it doesn't even exist in the Silicon Valley area right now. But let's just say it's 6% cap. Your property value just increased by $240,000. Isn't
that amazing?
I know. Isn't that amazing? I mean,
you think $100 for the rent is nothing, and it's only 12 units. This isn't 1,200 units.
Exactly. Right? And then, so if you use 4% cap, which is like in the Silicon Valley area probably, and your property value actually increased by $360,000. So that's a huge delta right there by doing little things like that.
Certainly, we're more compressed. That's a term that's popular in our business is cap compression. Yes. So basically, it means that the value of the property is going up, and the income and returns are going down. Unfortunately, yes. But it's certainly something that is. Varies a lot across the country, but it's. I just sold a Class C apartment house in Fort Worth, Class C, 5.75 cap rate.
Wow,
isn't that crazy? I read that there was I think a McDonald's up in San Francisco that sold recently for a cap rate of 1.7.
Oh my goodness.
It's really going crazy.
Yeah, and when I first started, I had bought apartment buildings. Actually, it was a 12 unit. It was a little in an area that is around 10 cap. So it's a very rough area. But I actually studied the area. I knew that there's going to be some improvements in that area. But my projection was about 5 to 10 years. But I didn't know, in less than 5 years, the neighborhood had changed already. And now is that 6 to 7% cap rate range. I mean, just by that has already increased my property value by a lot.
So how do we find how do you select the best property, and how do you decide when's a good time to buy or sell?
So
we could do a whole program on this.
I know.
on either of those.
Either one. So I know every time I talk to our clients, a lot of clients actually start with like buying their own primary homes first, and then after a while, then they're like, oh, okay, we have some extra money we want to invest. And first question is, how do I start? Where do I start? Where should I buy? So we always go through this whole like series of questions. Like we want to know about like, what is your investment objective? Like, do you really need the cash flow, or are you looking for appreciation? How much money you're looking to invest in it? What is your strategies in terms of holding it? Or do you want to be able to increase value and then flip it? So there's so many different strategies, and there's
no one size fits all, right?
No. And everybody's risk appetite, again, is so different. I have clients like, no, I only want Class C type of property so I can have a little bit more cash flow. And then I have other clients like, no, I want a Class A tenants, like best tenants, and I don't care about the cap rate. I just want something that I can hold on to and let it appreciate. So those are two very, very different type of clients.
Sure.
Yeah, and then we decide on which area. Of course, we also talk about if, just in the Bay Area, we can invest in 30 minutes away, or we can invest as far as 2 hours away, 3 hours away, which you will have much higher cap rate, and then you're going to have a better cash flow. But then that just means that you probably need to build a brand new team in terms of property manager, contractor, everybody. So, sometimes like our clients would really do a lot of things. I had a client who would fly his own little plane every time he goes, take a look at the properties. He would just fly over there, and then he would walk around the neighborhood.
He turned it into a hobby, huh?
Yes. And then it's just funny. He'd be like, oh, today I saw so-and-so, like these tenants there, and I just start talking to them. So we do a lot of market research together. We do a lot of statistics. We provide statistics, but a lot of times, of course, our clients would actually be there themselves to make sure that they are comfortable with the area. So, again, it's that some clients just don't want to be in Class C area, and some clients don't mind it.
Even though there's a lot of information available on the internet these days, the really best information you get is not. And certainly a lot of our listeners probably have heard about CoStar and those kinds of resources that do a tremendous amount of research and provide a tremendous amount of data. And if you're making a major investment, whether a syndicator is doing it or a large private individual or you on the behalf of an investor, it's really, you have to use that level of data and very, very serious underwriting to determine whether or not that's a good buy.
And even like you mentioned, CoStar, for us, I literally just got on the phone before I came over here, and I was talking to somebody, and he asked me, like, how do you know if the numbers you see on CoStar is accurate or not? How do you know what is the right cap rate or rent amount in that area? And I said, it's through experience. It's not something that you can say, okay, CoStar said it's this amount, and I'm going to take it as that. And you really need to have some kind of really personal experience in order to determine if that's accurate or not.
I get people often ask me, Tom, so what do you think, what's your prediction about, and what do you think is happening with the market? Mm-hmm. And I say, what market? As there are literally thousands and thousands of markets, depending on the asset class, depending upon the metro, depending upon the suburb within the metro, depending on what side of the street, depending on what class building, what size investment. All of those are different cycles, right?
Yeah,
and I think, and if I'd say that's probably one of the top things that I've learned in my experience of investing is how critical it is to understand each submarket and asset class within that submarket. And that's not something that you can pull off of, the general internet.
Yeah.
And I, even though I have a lot of experience in buying and selling literally thousands of units over the years, I wouldn't dream of going to a new area or a new asset class without getting on my team and an expert in that area.
Absolutely.
And we absolutely do every time we're
absolutely. And then you really need to take some time to learn about the market yourself. Mm-hmm. I know sometimes
so you can ask smart questions, right?
Yeah, so you can ask and then really watch the trend and watch how the sales been going in that area. We have some clients with even though we're working together, they're very hands-on. They will still do their own research, and they will still, like I said, go over there and to look at the market themselves. I think one of the biggest mistakes a lot of people, especially first-time investors, is they completely relying on, let's say, a realtor to do everything for them, to let them decide what, which market, which property.
In the end, exactly. You got to make the decision.
Exactly.
Helen, we can take a break here for just a moment, and we'll be right back, and we'll talk a little bit more, I think, about the whole CCIM process and underwriting, if that's okay.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit wilsoninvest.com. That's wilsoninvest.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back to Real Estate Radio Power Investing with Helen Chong today, who's talking to us about her experience as a broker and founder of Haylen Group?
Yes.
Yep. And also president-elect for CCIM for Northern California. So, Helen, on that note, let's talk a little bit about CCIM and what kind of tools what does one learn, or if you're interfacing and utilizing someone on your team who has that background, what does one learn in CCIM, and how does that help you make good investment decisions?
So, first of all, CCIM is really one of the most prestigious destination in commercial real estate.
I guess we should say what the acronym stands for.
That's true. It stands for a Certified Commercial Investment Member. And only 6% of the commercial real estate agents have this destination. And every one of us.
It's nationwide.
Yes. Actually, globally.
It's global.
Yeah, this destination is global. And so as a matter of fact, to get this destination, it does take really rigorous classes. And for example, we have 4 core classes, and each core class is 4 full days. And every single person who took those classes will tell you they come out with a really big headache.
I don't think that's a good advertisement, Helen.
I know, but I would visit the classes, and then I would ask them, I was like, do you guys have a headache? They're like, yes, it's so much information.
Well, it's all the more reason to get someone on your team who's been through that, so you don't have to have the headache, right?
Yes. And I absolutely love it. I'm telling you, when I went through the courses, during those, the whole entire courses, I actually had, I think I went through 2 pregnancies. 2 out of the 3 pregnancies. And so I feel like my babies actually had gone through a lot of math and numbers, while they were inside me. So,
So how are they doing in those subjects today?
They are really good with
good,
math.
okay.
They're really good with math.
Maybe there is something to that.
Yes. So with that, after you take all those classes, you also have to have a portfolio requirement. You have to complete either $30 million or $10 million transactions to show that you really have done it before you are even qualified to take this 6 hours exam. So it's a pretty long process. For me, of course, it took a little longer, 4 years, and on average, it actually takes about 2 to 3 years. And we always kind of joke around, it's like a PhD level in commercial real estate, just because there's so much analysis. But what it has done to me, to my work, is that it really took my level of analysis to a whole other level, because I already love numbers. I love spreadsheets. But this one, I started doing, just picked out one analysis that they had taught me, which is a 10-year analysis. From here, I can analyze the current, based on the current number. I can use assumptions and then analyze the 10-year cash flow with, of course, different assumptions, because every single property has different ways of making it better, right? And then I can learn about like what I can sell this property, probably can sell this property at about 10 years later. Then I can also see what is the IRR of this property, if it makes sense or not. Because cap rate is not necessarily equals to IRR. So, and then I can see like what kind of loan program I can qualify for with this property, because buying apartment buildings to qualify for a loan is based on the income of this property. So just through that one spreadsheet, of course, there's like 5-6 tabs, but through that, I pretty much can show everything to my client, and my client has really clear picture of like, oh, what this property can do. And then we comb the numbers, each number is down, and then say, okay, maybe we should adjust this assumption a little bit like this, make it a little bit more aggressive, or make it a little bit more conservative.
Let's go take a break here, and we'll be right back on Real Estate Radio Power Investing with Helen Chong and talk more about commercial and multifamily investing.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit wilsoninvest.com. That's wilsoninvest.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back to Real Estate Radio Power Investing with Helen Chong today. She's the president-elect for CCIM in the Northern California area. Let's just take the subtopic of assumptions. Can you give some examples of some of the assumptions? Let's take a multi-tenant retail center. Mm-hmm. Okay. So what are some of the assumptions that you need to factor into your underwriting?
Well, some of the underwriting we do is probably capital improvements, but then like a lot of time we want to look at the market and what is the rent increase that you can do. For retail centers, a lot of times you do a pretty standard like 3% increase, right, over years, and it's triple net. So the expenses is a little bit easier. To me, I think apartment buildings is even more complex, because apartment buildings, you don't get to have the tenants pay for your expenses. So you really make sure that your expenses are calculated more conservatively. Mm-hmm. So we do assumptions based on like your expense is going to increase every year, and then you might have to put in some work onto the property. And in terms of the rental income, sometimes if this property, let's say, is way under market rent, but you don't want to say like in a year I can convert this whole apartment building into a market value rent property. Yep. So you want to kind of
phase it over.
Yeah, pace it out, and then maybe it could be a three year project to get it up to the market value. But at least you can use this analysis to slowly and see what will happen if it takes 3 years, what will happen if it takes 5 years, et cetera.
And it's not a simple analysis.
Yeah.
Some of these underwriting spreadsheets that we've done, and I'm sure you have too, are not just hundreds of cells, sometimes thousands of cells.
Absolutely.
Yeah.
And the thing is,
imagine trying to do that by hand before spreadsheets existed. You couldn't. It was just impossible.
Yeah. But you know what? When we learned the CCIM analysis, actually we used it by hand. We did everything. We fill out every single cell.
You can't really appreciate
exactly.
it.
And then now, of course, we can just punch in the numbers. But in the beginning, we really did fill in every single box by hand.
Yep. And I like to use the example of a multi-tenant, even triple net, where you don't have to estimate the expenses quite as much.
Right.
You do like tax insurance, and you get reimbursed, but there are other expenses you don't. But we closed last year on a 103 tenant, 6 location industrial portfolio in Houston.
Wow.
And just one element alone is for all 103 tenants, you have to put in when does that lease expire? What's the probability of them renewing? If they do it, what price is that going to be?
Exactly.
If they don't renew, how long will the vacancy be before you renew it? And at what price will the new tenant pay?
Yeah.
And that's just for every tenant.
Exactly.
And that's times 103. So so you got to have somebody in your team who is willing to do it, knows that they have to do it to give you a good recommendation, and to for what to invest in, and have the ability to do that.
Yeah. And you have to look through the leases, and then just like what you're saying, like how long is the lease, and then when are they going to expire? You're going to look at like if it's possible to raise rents, or are they Section 8 tenants and things like that. So there are definitely a lot of factors. I notice a lot of people are missing the vacancy rate. They assume that, right now it's 100% occupied, and they don't factor in vacancy rate. But you definitely should, because you cannot be 100% all the time.
You mean vacancy rates go up and down with market cycles?
Yeah. Yes, but of course, sometimes it's hard to do it by the year. But we always use a little bit more conservative approach to add in vacancy rate as well.
Yep. How do you guide an investor to as to what asset class to invest in?
I always think that is quite a personal question.
So Helen, how do you advise an investor about what asset class to invest in?
Yeah. So again, it really depends on the client's risk appetite. I don't really dictate that for them. I let them tell me what their risk level is. So I have clients who I would always try to push them to expand their horizon in a way. But at the end, you could tell just by saying like, I don't really like that. I don't really want to deal with these kind of tenants or these type of assets. So I think a lot of people, they don't know what they don't know. So you have to let them see it and then decide if they can accept those type of asset class. Yeah. Everybody wants cash flow and appreciation and best tenant.
And no risk.
Yeah, and no risk.
And next door.
And it just does not exist.
I haven't found that so far. So that's right.
Yeah. And everybody wants the best price too, wants the best deal. And then if you are chasing after the best deal, you probably will never buy a property.
Let's go take a break here, and we'll be right back on Real Estate Radio Power Investing with Helen Chong and talk more about commercial and multifam investing.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit wilsoninvest.com. That's wilsoninvest.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back to Real Estate Radio Power Investing with Helen Chong today. She's the president-elect for CCIM in the Northern California area. And she's on here today to talk to us about her experience in transitioning from residential or home brokerage and investing to commercial and multifam. Do you have any suggestion on how they kind of change their mindset about that?
I think people who are listening to your show or coming to a meetup group, that's like really the first step, coming to the meetup group. If they cannot even make it to your meetup group, I think maybe their motivation is not really there yet. But if they have come to your meetup group and then it's like, okay, what's next? What can I do? You try to find a mentor, somebody who can really lead the way and teach you how, or show you how to go there. I think find somebody who have done it, and just, I always say every single person need a coach. Every single person need a mentor in their lives. So find somebody who has done it and then let them be your motivator. And the people is all about what kind of people you choose to surround yourself with, right? If you see people around you always do investment already, I can assure you will want to do it and you will take action, because if they can do it, why can't you?
dear friend of mine says you become the average of the 5 people you spend the most time with.
I really believe in that.
I do
truly
too.
believe in that.
Helen, thanks for being on the program today. Tell their listeners again how they can reach you.
Email me at Helen, Helen, at HaylenGroup.com.
And if you're listening to this program before July 25 of 2019, Helen will be our keynote speaker at the next month's BACOM.club meetup. And that's, again, BACOMM.club. You can go look for the information there, and you can connect up on Meetup. And it is free, so you can't even use that for an excuse to not come. And you get a lot more information like you've heard today. And we certainly encourage you to do that. Also encourage you to go to wilsoninvest.com, where you can sign up for our weekly newsletter. You can get access to our 6 years of podcasts of educating investors and audience about real estate investing and commercial and multifam and syndications. So we have a lot of great speakers like the Chief Economist of Fannie Mae, Dr. Doug Duncan, Robert Helms of the Real Estate Guys, and Bruce Norris and Sean O'Toole, and just a lot of wonderful speakers and guests who come on our program. So we look forward to you being at Meetup. We look forward, Helen, to you being with us there.
I'm very excited. We're going to be going over a lot of numbers.
But I've heard Helen speak before, and she makes it a lot of fun.
I hope so. But I really want to say thank you, too, for putting these meetup groups together. When I first started, I used to go to these kind of seminars, and that's how I fell in love with real estate investing, and that's how I met a lot of investors and took actions. I think people do need these kind of groups to help them to take action.
They certainly changed my life, indeed. So now I'm glad, just delighted to give back.
Yeah.
Thank you again for being on Real Estate Radio Power Investing. Thank you to our listeners. And remember, the only thing that matters is what you do next.